Hi, my name is Raymond Cunha. I'm a Senior Vice President and Senior Portfolio Manager at Voya Investment Management and the Lead Portfolio Manager of Global Space. I have over 30 years of experience in the global equity markets and have had numerous responsibilities over my career, including being a global equity analyst, specializing in the industrial sector, portfolio manager in the mid-cap growth arena, as well as even running a long-short hedge fund for 3 years. I've spent my entire career concentrating on investing in the global equity markets, which I look forward to doing for many years to come. When people hear the word space, it often sounds distant, almost science fiction. But the reality is that space is already deeply embedded in our everyday lives. It is not future, it is present. Today, space-based infrastructure, particularly satellites, is a critical background of the global economy. Every time you use GPS, whether it's navigating an Uber or enabling autonomous systems, that's space technology at work. Every financial transaction, from credit card payments to mobile banking, relies on satellite timing and communications infrastructure. Weather forecasting, agricultural planning, and supply chain optimization all depend on satellite data and Earth observation. Even everyday connectivity, video conferencing, IoT devices, and global communications relies heavily on satellite networks. In fact, the satellite communications segment alone is worth $90 billion market, supporting a wide range of industries from agriculture and climate monitoring to internet connectivity. So while space may sound like a distant frontier, it is already a fully functioning mission-critical ecosystem that underpins modern life and global economic activity. From an investment perspective, what makes space particularly compelling is the powerful set of structural growth drivers that are accelerating today. First, we are seeing a dramatic decline in launch costs, driven by reusable rockets and new launch technologies. Launch costs have fallen from roughly $65,000 per kilogram in the past to closer to $1,500 today, with potential to fall even further, which is fundamentally lowering the barrier to entry and expanding the addressable market. Second, satellite miniaturization is enabling a new generation of smaller, cheaper, and more scalable satellites. This has led to a surge in satellite deployments and constellations, dramatically increasing the volume and utility of space-based infrastructure. Third, there is explosive demand for satellite data. As the world becomes increasingly digital, the need for geospatial intelligence, connectivity, climate monitoring, and real-time analytics continues to grow, making satellite data an essential input across industries. Lastly, space is becoming increasingly critical in national security and defense. With rising geopolitical tensions and the need for real-time monitoring, surveillance, and communication, governments are prioritizing space capabilities as a strategic asset. Taken together, these drivers create a reinforcing cycle. Lower costs enable more launches, more satellites generate more data, and that data drives incremental demand across both commercial and government use cases. This structural demand is translating into a rapidly expanding market opportunity. Today, the global space economy is estimated at over $600 billion, with expectations to grow to over $1 trillion by 2030. We also see strong growth across underlying activity indicators, rising satellite launches, increasing private funding, and a rapid expansion in space-related startups, all pointing to an ecosystem that is scaling quickly. Stepping back, we believe we are in the early innings of this evolution, similar to where the internet or cloud computing were in their early phases. Space is not just a compelling narrative, it is a large, growing, and increasingly critical economic system within the multi-decade structural tailwinds. People often ask, in a universe of hundreds of space startups and legacy aerospace giants, how do you pick the winners? Our process is rigorous, using top-down and bottom-up approaches. It begins with the identification of our universe, which we believe is around 1,000 securities. We screen for high-quality, fast-growing stocks that are trading at relatively attractive valuations. We then may employ a top-down thematic mapping of stocks that fit into our tiering system for constructing the portfolio. For example, we track the global space economy's infrastructure from launch cadence and satellite density to the emerging themes such as direct-to-device communication and orbital data centers. Once a theme and the stocks within it look attractive, we move to bottom-up fundamental analysis. This involves a rigorous assessment of potential revenue and earnings growth, contract backlogs, margin profile, free cash flow generation, and total addressable market expansion opportunities. When we move toward a final investment decision, we place the greatest emphasis on three critical criteria: technological advantage, upside to growth expectations, and management execution. We start by evaluating the technological advantage, whether that is launch capabilities, satellite manufacturing, cybersecurity, photonics, or communication networks, and we ask ourselves, is this technology merely incremental, or does it represent a generational leap? Second, we evaluate future growth potential through the lens of the launch to revenue cycle. We favor companies that have a clear path to recurring revenue, moving away from one-off government contracts towards scalable commercial services. Finally, and perhaps most importantly, we vet the management team. Space is unforgiving. We look for leadership that balances bold vision with fiscal discipline. We want to see a track record of hitting milestones on time and under budget. Investing in space requires a long-term horizon and a disciplined approach. By focusing on these fundamentals, we aim to capture the exponential growth of the orbital economy while maintaining the inherent risks of this emerging sector. An important part of our ability to capture opportunities in the space ecosystem is the structure and positioning of our investment team, which we believe provides a meaningful competitive advantage. At the core, we are a fundamental, research-driven team with deep expertise across technology, industrials, and thematic investing, allowing us to analyze space not as a silo, but as a multi-industry ecosystem spanning aerospace, data communications, and software, among other areas. A key strength is our use of proprietary research inputs and methodologies to identify emerging trends early. We leverage a combination of bottom-up fundamental analysis, thematic framework development, and a proprietary research channel such as grassroots research, which gathers real-time insights from industry participants, customers, and supply chains. This allows us to go beyond traditional financial metrics and gain a forward-looking view of demand trends, technology adoption, and competitive positioning, which is critical in a rapidly evolving sector like space. Another key advantage is that the team is based in San Francisco, which sits at the center of global space and technological innovation. This proximity enables frequent company engagement, including regular meetings with management teams across both public and private companies, direct access to industry ecosystems, including engineers, founders, and venture-backed companies shaping the next phase of growth, and participation in key conferences and industry events where we track the latest developments in areas such as satellite communications and constellations, AI integration, and space-based communications. This on-the-ground access is particularly important in space, where innovation cycles are accelerating and much of the value creation is happening outside of traditional channels. Additionally, we combine this with the distribution partnership of Allianz and the scale of Voya as a top 50 global asset manager, which gives us strong access to the sell-side ecosystem in direct dialogue with company management teams globally, enhancing both idea generation and ongoing fundamental insight. Importantly, these advantages are not just structural. They are directly reflected in our investment process. They allow us to identify emerging themes early, such as the shift towards satellite data and connectivity, differentiate between hype and commercially viable opportunities, and build a portfolio that evolves alongside the ecosystem, capturing both current revenue drivers and future growth areas. This combination of deep fundamental expertise, proprietary research capabilities, proximity to innovation, and investment management scale provides us with differentiated lens on the space economy, helping us translate industry insight into investment outcomes. We have entered a pivotal era where space has transitioned from a government-led frontier to a high-velocity commercial marketplace. As we manage the Global Space Fund, our focus isn't just on spectacle of launch, but on the infrastructure that makes a multi-trillion-dollar orbital economy possible. We are seeing a generational shift. The radical reduction in launch costs has turned space into a global utility. From LEO constellations providing seamless connectivity to orbital data centers and microgravity manufacturing, the final frontier is becoming the nervous system of modern industry and national security. As we manage the fund, we will continue to prioritize companies with technological moats, resilient contract backlogs, and management teams that demonstrate fiscal discipline. We don't invest in stories. We invest in scalable, profitable platforms. The opportunity ahead is structural and secular. We are committed to capturing this exponential growth by investing in companies building the backbone of 21st century infrastructure. Thank you for joining us on this journey.
投資信託なら東京海上アセットマネジメント